Quick one before the video, guys. Got a message to say Trading212 have reopened their free share promotion. So if you know anyone who wants a new account, you can use my link and get a free share up to $100. Link down in the description, and I'll put it as a pinned comment. Cheers, guys. Hey guys, Stock Saturday, or Friday for me. I'm recording a little early, so the markets are still open. Things moving around a fair bit. Basically a flat week for me, which is fair enough. Sort of volatile markets at the moment. A lot of earnings sort of coming out, and some things are sort of having positive earnings and the stock crashes, and yeah, everything's sort of a bit unsure. So looking at some bits that have come out this week, CleanSpark had their quarterly earnings, a little bit sort of silly looking through them really. We know sort of everything's down, profit is negative at the moment, they're loss making. That's basically sort of down to expansion and sort of high hash rate, etc, etc. We're sort of waiting for the crypto bull market on that, but I thought the interesting thing was the share dilution. So they've said they're at 112,680,000 shares as of May the 10th. So they give you a figure in the actual earnings, but that would be March 31st. So as of May the 10th, 112 million, and I, in my sort of projections, have them at 150 million by the end of the year. So if they've bought the new machines potentially to get them to 16 exahash included in this, then that would be hugely bullish. They might need to do a bit more to sort of actually build the facilities and get them up and running. But yeah, potentially sort of a lower dilution than they were projecting, certainly, and potentially lower than I was projecting. But this could be just a part payment on the rigs. They're sort of very secretive about all that. Don't want to be sort of manipulating the stock price while they're issuing shares, I guess. So yeah, that's one to sort of keep an eye on. Then we've had Vale's first quarter earnings come out, sort of as expected, not particularly good, given the sort of low iron ore prices. They're still sort of primarily an iron ore miner, and that has come down, so revenue's down. Also, the production of pretty much everything is down on the fourth quarter, but up from the first quarter last year, so not too bad. Net income sort of down a fair bit as expected. Debt or net debt is back up well above first quarter last year and slightly above last quarter. This is largely, from the looks of it, down to cash dropping, so they haven't taken on sort of a huge amount of debt. It's just cash dropping, and capital expenditure, they're calling it disciplined, which I think is a euphemism for tightening their belts while prices are down. But there you go. So if you come down to their CapEx section, you've got growth projects, CapEx being a lot lower than sustaining, which it has been for a while, but yeah, it's basically all going into iron solutions, energy transition materials, taking up sort of a third, a quarter of the total. A little bit of nickel, some copper, and then energy and others. But the sustaining projects, again, a lot of it going into iron ore, and some going into the energy transition materials. So yeah, it's they're still going to be an iron ore miner. They're still looking, I believe, to spin off the energy transition metals business. So we'll see. And if you come to their segment section, so iron ore, as I say, is sort of the big ticket item, 6.4 billion in revenue, and sort of over 50% adjusted EBITDA margin. So they always make a few adjustments. You can't take that sort of at face value necessarily. And then energy transition metals, 2 billion for the quarter, and 25%, or just over 25% EBITDA margin. So still sort of much lower margins for those, but we're positive for the future. Copper sort of isn't quite as bad as nickel. Nickel sort of being 20% and copper being about 40. So yeah, copper is sort of more promising at the moment, but depending on battery technology, we could want a hell of a lot of nickel going forward, and they're one of the largest players. So that's good. So moving on to Himax, and kind of resigning myself to sort of best case scenario, they are just ever optimists, and sort of worst case scenario, they are just lying on purpose, that this sort of constant, this quarter is bad, but sort of we're turning a corner, as they have said yet again. This first quarter was sort of reasonably rough. It's beat revenues and EPS beat the guidance, but it's still a decrease. Revenue down 6.9% quarter on quarter, was expected to be between 12 and 17% down, but it's still a decrease, obviously. And gross margin was 28%, where that was sort of 40-50% before. And sort of, Q3, I think last year they were saying Q1 this year would be sort of the turnaround. So yeah, maybe it's not going sort of quite as well as they thought, but they're still saying Q2 this year is, so up to June 30th, is still going to be a bit rough, slightly declining revenue, 9% quarter on quarter, gross margin right the way down to 20%, and a profit per share potentially at a net loss, minus 2.9 cents to 0.6 cents. And they're saying the second half of this year, so Q3 and 4, will be the turnaround. Short-term phenomenon with a rebound around the corner starting in the second half. But I've kind of heard this sort of many times before now, and not 100% sure whether to believe them, but I'm very happy with the sort of company overall and their products. So I'm just sort of learning to take their forecasts with a pinch of salt, to be honest. Cash down from 221 million to 196. So total current assets down a fair bit. Basically, just that. You got current debt hasn't moved. Long-term debt has come down 1.5 million. So slight reduction on that, but very little changed. They don't issue or sort of buy back shares generally. So yeah, not too much to look at there. Again, sort of one to put to the back of the portfolio and sort of wait for better times. Not one that I would want to sell out at sort of this valuation. It's one that I would just kind of, as I say, put to the back of my mind until things improve. TSMC just came out with their monthly revenue, sort of saying, again, it's sort of basically the same as last month, but that's what we were expecting, a fairly flat year. But it's not one that I want to be sort of moving away from. I still think coming out the other side, chips are going to be very strong. So don't want to time it, basically. So I've started a new position, Core Mining. It's in various sort of pronunciations of that, but that's how I believe it. So I sold out of my FTSE 100 short position. Just kind of sort of got a bit bored of it. It doesn't really move all that much, and even though we're sort of raising rates, just raised rates 0.25% in the UK, I'm not 100% convinced the FTSE will sort of go down all that much, to be honest. It gets a lot of its revenue from outside the UK, so it'll be sort of very affected by the pound. And yeah, it's I'll keep the NASDAQ one on for a little while longer, but yeah, decided to get rid of the FTSE 100 one, and thought of sort of putting that into either CleanSpark or Fortuna Silver Mines, but I kind of thought maybe diversify a little. And one sort of downside with Fortuna is mine life. Sort of digging a little bit deeper, you do find sort of their new projects are reasonably good, sort of, 7, 8 years of mine life left, but they've got a couple of projects that are sort of a year and a half left, really. So they're squeezing the last bit of cash out of that and sort of buying exploration companies and sort of looking to extend their life. But looking at Core Mining, so they're a 1.16 billion market cap at the moment with a little bit of debt on there. A net debt 450 million, so about 1.6 billion in enterprise value, and revenue sort of relatively flat over the last few years with sort of fluctuating production and silver and gold prices. And net income is negative with prices where they are. So everything's looking sort of rough. People don't want to touch this sort of company. And I'm thinking that's potentially sort of a contrarian bet to get in them. I'm kind of thinking higher gold and silver prices sort of going forward. Could do well. So just looking at the highs of silver, silver was at sort of $30 in the sort of the Wall Street bet pumps time, basically. Sort of got to the high 20s, and Wall Street bets sort of pushed it to 30 very shortly, and Core was pushing $10. So with silver at 24, dropped down sort of a couple of dollars this week. It's down to 326. So they've been issuing a little bit of shares to expand one of their projects, but that seems a hell of a drop to me. Looking at their earnings presentation, I've been sort of digging through their results recently, and they sort of give a 2023 guidance of between 320,000 and 370,000 gold ounces, which is sort of huge, really. And these are on mines with sort of generally 8 years plus mine life. And the Rochester one is being expanded. They've sort of near enough spent all of the capex that they're going to need to expand that. A little bit more needed sort of throughout the rest of the year, but the bulk of it sort of been spent over the last year and a half, and that should double that output. So that's pretty good, and double the silver output. So 10 to 12 million ounces of silver this year, and they're sort of projecting Rochester to expand on that as well. So potentially above 12 million ounces, and their costs are pretty good as well. Sort of between 900 and 1,050 for one of their larger projects, and then sort of some higher cost mines, sort of $1,700, $1,350. But I think this would all be solved by higher gold and silver prices. Their main current Mexico mine is sort of $15 silver, so about $9 sort of mining profit, as they call it, at today's $24 silver price. And the Rochester one sort of should be around about there, I think, once they've done the expansion. It's higher than that at the moment, and same with the gold price, but once they've expanded it and sort of get the economies of scale, then that should be coming down as well. So with all of this production, I see it as sort of rather undervalued, and I thought might as well diversify a little bit. So I've got First Majestic, Fortuna, and now these. I'd rather have this than sort of an ETF, to be honest. Just sort of pick a few of mine and do it that way, rather than sort of have 25 of the ETF's picks, and some of those sort of I don't think are as good value. So I'm going this way, potentially sort of adding to these and Fortuna. Not 100% sure about First Majestic, whether I'd want to add. That is sort of a larger position. So we'll see. And Pan American in the other ISA. So just looking at the news for the week, house price index for the UK was a bit worse than expected, but not 100% sure whether to really believe these anymore. Sort of them Nationwide and the Rightmove one are all sort of quite far apart at the moment, so where they're getting their data, not really sure. Wednesday, you had the big CPI numbers from the US, and they were basically all on par. So 0.4% core CPI for April. I would say that is the important one to focus on. It's not what makes the headlines. The sort of ordinary year-on-year CPI is what makes the headlines, and that's below 5% now. Was expected to be flat on last month, and that's come down to 4.9%. But everyone, Powell especially, focuses on core CPI and the monthly more than the annual, or the last 3 months, he said. Obviously, he prefers his PCE figure rather than CPI, but he sort of basically said core CPI is sort of similar and more important before. So, yeah, basically not a lot of news on the CPI, but that would kind of indicate no more or no rate cuts, certainly, as people are pricing in. And then you had the Bank of England base rate rise. So this wasn't the day after the US one, like last time. We've gone the week after EU and the US, but we did 0.25% as expected. 2 people voted for unchanged, 7 voted for the hike, and they are sort of saying a little bit more confidently than the US that they would do one more hike, and then so they'll get to 4.75%, and then they see us being at, I think it was 3.25%, sort of in the longer term, sort of a year or so, I believe. So, yeah, make of that what you will. I wouldn't trust the Bank of England, to be honest. And then, yeah, you had the jobs data, which was sort of not a huge change, but core PPI, so the producer price index, seen as a sort of a leading indicator for headline inflation, is 0.2% on the month and 3.2% on the year. So if this feeds into normal inflation, then we could be seeing a more of a reduction in the future. So that was the news, and yeah, the portfolio for the week, as I say, not a huge amount of change. Himax dropped reasonable amount, about 7%, I think, on that earnings. I'm not really sure it was that unexpected, but yeah, the sort of earnings and revenue beat. Thought it might have people might have been a little bit more impressed, but I guess the forecasting Q2, as I say, yet again to be rough, but sort of the second half of the year to rebound. People didn't like it. One that has been sort of rocketing up is Alphabet, all the way down at the bottom here, 11.5% up for the week. They had their sort of investor conference, and that seemed to sort of go down reasonably well. Some new products and new bits and pieces. Not one that I've sort of been keen to add, really. It's just sort of a reasonable value, I suppose, but not really my focus at the moment. And then very little has moved in the Trading212 ISA, to be honest, other than that change that I've made. So, yeah, the FTSE 100 short is gone and replaced by another silver miner. So, getting a little sort of mini ETF going. I've got CleanSpark and Atalaya sort of doing reasonably well, a little bit up and down, considering copper's not doing very well. I'm pretty happy to see Atalaya still in the green, so yeah, not bad. And China has barely moved at all. It's just stayed planted sort of where they are, basically. Those 2 holdings just sit at sort of just under $5,000 week after week. Again, not ones that I'm sort of keen to add. I do have a little bit of cash from the Stellantis dividend, which I haven't done anything with yet. I'm kind of tempted to maybe just put it in the ISA and start buying something kick that off because I haven't even subscribed to the ISA just yet, and we're already in May, a month after the open date, so got to do something with it. But yeah, leave your thoughts in the comments below. Let me know what you guys are doing, and like and subscribe. See you soon.